You did take the name of ICICI Bank. That brings me to attention the HDFC Bank space that we've been discussing for far too long. Finally, were you happy after 4 years of nil returns? It started to move and fresh highs were being seen. Do you think it can continue to perform in the new year at least? Should it be a part of the core portfolio for the new investors who may not have had HDFC Bank thus far?
So for 25 years, I have 30 years, I have not 30, but whatever, somehow maybe 28, 30 years, I've been holding the stock. And every time it has looked good for the next 2, 3 years, except in the last 4 years also, it looked okay to good and then it did not do well. But we have stuck with it because there is definite progress on the bottom line in terms of the merger with HDFC, which took longer than we thought in terms of coming together. But again, in a portfolio sense, where you want a little bit of stability, a little bit of quality and history, and you can see that the last 3, 4 years, this is one sector which is the private banks, but particularly HDFC Bank and Kotak, but not so much ICICI, have underperformed, but their earnings have continued to grow at some 10, 12, 15%. And even now, we think that will happen. And currently, for this year, even a 15% earnings growth will be quite valuable, considering that our consumer sector is not doing well. Most probably, our auto sector will not do well, even though numbers today were like 1% better, other than in Maruti. So, therefore, I think a 15% high visibility earnings will be valuable. So, it's still in nearly all our portfolios, number one or number two stock, and we will continue, yes.
If you like the video, do like, comment, share and subscribe.